Well, joining us is Aureus Asset Management Chairman and CEO Kari Firestone for more on these markets. Kari, we saw an interesting day yesterday, followed by today. It looks like a higher open. What did you make of yesterday's action? We saw particular weakness in sort of the higher multiple sectors like software and semiconductors.
Well, hi, Melissa. Yeah, I think that we really needed to have that pause. We've had such a strong run in the market. You know, by the end of last month, it was up 19%. We've had enormous strength from software, from consumer discretionary stocks, from the tech sector and the communications companies. And so they've led all the way. And seeing that earnings were decent, the market went up through them. Now with a couple of, bad pieces of news, the downgrade of Fitch yesterday and from the on the U.S. government debt, I think that it makes sense to have a pause, a reset, and then we look to see whether earnings growth can start to accelerate into the second half of this quarter and into next year, because we need that since multiples are fairly high.
Are you optimistic about the second half of the year? Because it seems like there has been a real change in sentiment on the street in general when it comes to whether or not you join this rally. And it seems like more people are embracing the narrative that the economy will be okay and that this rally is here. We've got a lot of strategists on the street bumping up their S&P price targets to year end.
Well, most of those strategists were very negative going into the year. The majority of the banks were all calling for a recession and expecting there to be, very, very weak quarters this year. There have been. I mean, the second quarter was down. S&P earnings were down, so far 4 to 6%. And now they're backing away from that. On the other hand, the market has moved higher. Interest rates are probably peaking here. Inflation has come down from 9% to 3% or 4%, depending what number you use. And if there isn't going to be a recession, then there either is going to be better earnings going forward, or we're going to be sort of stuck in this malaise. And we heard some optimism from companies. On the other hand, the stocks have moved higher. So we're in this sort of, I would say, holding period right now where multiples are high. Apple got to a mid-30s multiple, and investors said, maybe this is a little too high right now. You look at tech names like Google, Amazon, Meta, fantastic performance out of these stocks, and there's some profit taking going on. So, we see there's potential in lots of names. Remember, the rest of the market is up much less than the S&P. If you look at most of the sectors, they're up, mid to low single digits, while consumer discretionary technology and consumer communications companies are up around 40% year to date. So I think there is potential, but we have to just, I would say, regroup and look to see whether it continues.
Are you in a position now, Kari, where you are looking for things to buy in this market? It sounds like you think it's increasingly harder to find value in this market, or are you looking to trim positions here, knowing that we're sort of in uncertain territory at this juncture?
Yeah, well, we're always doing some of that. That's portfolio management. There are names like Charter Communications, which really has been a poor stock this year. It sells for a multiple of about 11 times next year. It's a very solid cash flow company. It had a little negative or a lot of negative investor sentiment this year because some of their capital investments. But, we believe in that. It's starting to act better, and it's a reasonable price. I mean, Booking Holding, that's a stock that's been a strong stock, but we still see an awful lot of travel in people's plans. We're seeing expansion of their market. Some of the geographies that were weaker are really showing great strength. You hear it from the airlines, and still not an expensive stock on a multiple basis. And a name, even a name like UNH, that's more defensive, but it's a stock that, great healthcare company, leader in its field, high employment, and that means people have insurance. And the coverage in their Optum group is providing a lot of growth to the company. So, we're finding names. It's just that there's a lot of, kind of froth in some of the names in the tech sector.